Hello, everyone. Thank you so very much for joining us today. My name is Randy Wostratzky, a director here at the Spectrem Group, and I'm joined by Spectrem President George Walper. Today, we're going to be going over some of our most recent research with wealthy investors in the United States, mainly focused on their asset allocation, portfolio management, and their perception of various financial service providers. So I'm going to let George get started with some of the latest information and feedback from our monthly affluent and millionaire investor confidence indices, and then I'll get started on some of our mass affluent, millionaire, and ultra high net worth research. George?
Thank you, Randy. This month, as we've said in other months, is always quite interesting. However, two things. One, this research that we're about to talk about with our Millionaire Confidence Index took place around January 20, 21st, 22nd or so. And at that point, the market was still quite robust, and hopefully when you're listening to this, it continues to be or recovers from not being so robust. It's been down the last 3 or 4 days. But what's more interesting as we go through the indices here, is that at some level, some of these wealthy investors were starting to sense that, well, maybe things were at some of the all-time high or the peak, and maybe it was time for them to be concerned. At the same time, we found that their outlook about their life economically, their household finances, was almost at a record level. So let's look at some of the more detail. So here, the Millionaire Confidence Index dropped just a little bit from last month. Last month actually was quite high, and compared to a year ago, it's a little bit high, 3 points. Neither one are significant. And you see that the overall wealthy investor, affluent investor index dropped as well. As a reminder, these are measures of wealthy Americans. In the case of the affluent is $500,000 of the net worth and above, and the millionaire index is for $1 million and above. So as we always say, this does represent fairly wealthy Americans and is all-encompassing of all groups above that. Here's some historical look. We like to always suggest two things. You look at trailing 12 months, which is the top two lines, blue being millionaire and orangish being affluent, and then down below the trailing back to 2004. And we're essentially at three levels last year, April of last year and September, and then most recently last month. We're essentially at the peaks of the last 12 months. A little bit of drop this month, not that significant. It will be interesting to see what happens next month, given what's happened in the last week or so in the market. If the market comes back in the next week, people will feel differently about things. But as I said, perhaps one of the more interesting indicators, one of two interesting indicators, the second we'll get to in a little while. But this is first is what is their overall outlook for a number of components we look at: their household income, the financial situation of the company they may own or where they work, etc. And look at the significant jump from December to January, where it's now at 39.9. The all-time record high was, since we've been doing this, was back in 2004. So this is the second or third largest feelings that things are still looking quite robust, and by far the highest and biggest jump since the change of administration. Every one of the subcomponents are up. The overall is up from last month and from a year, pretty significantly from a year ago. Folks look for household income. Now this will have an impact or impacted by the tax law, the new taxes which took place, and people were beginning to anticipate that somewhat. But look at the overall impact on the economy, which is up to 30.8, somewhat below the 43.6, the all-time high. Company health, as I said, the health of where they work or the health of where they own, and household assets. Now, just keep that in mind. We're going to come back to talking about that here shortly. This particular month, we asked a rotating question: what significant changes or action plans are they thinking of taking to protect their financial well-being? Essentially no changes for the majority of, or the largest percentage. Alter investment strategies, and the other ones have been flat here for the last 6 months or so, 3 or 4 reporting periods. The same thing when we look at this compared to millionaire and affluent, very similar to each other, nothing significantly different. I suspect the next time we ask this, which will be in 3 months, we're going to see some pretty different categories here. Same thing here when you look at those working and those retired. you do see, as we always see, some differences between what the retired folks are thinking and those that are still working in terms of who's going to invest more, who's going to save more, etc., who's going to reduce spending, etc., or change spending. In the case of retirement, I suspect they were thinking of reducing spending as opposed to increasing more in spending. Now, this is the second sort of key data point from the month relative to where are folks thinking of investing in the current month, last month, etc. So stocks compared to last month are somewhat flat. So they're not thinking of investing incrementally more in equities, and yet their outlook for everything in their life was significantly higher. You can see that equities are a little lower than where they were in March of 2012. Same with mutual funds. I think of equities, stocks, and mutual funds in a similar category. Fixed income, about the same as last month, a tad higher, impacting more about people saying, I'm not going to go in the equity markets, I'll either go fixed income or short term. And then you can see short term essentially was flat this month to last month. So you would expect, given the outlook from their overall outlook and being the second highest ever in 14 years of doing this, that you would have thought they optimism about the markets. But essentially what they were saying is they're ready to be careful and cautious about putting more in the markets. They're not saying they're going to get out. They're not saying they're not investing, but it is something that's interesting given what took place about 10 days after this set of measurements. Now, I added a few extra points of research. Given some of the continual battle in Washington and covered all over the place on the media, we decided to ask a couple of questions to wealthy Americans relative to how they feel about their elected officials voting along party lines, it seems, on every critical piece of legislation. And so the first thing we said was, what should the elected officials, Congress, focus on? Infrastructure, immigration, national security, reducing the debt, and other. And we show at the top which all wealthy Americans, and then split by Republican, Democrat, and Independent. And you can see some of the differences going left to right. First, infrastructure, and you'll see in most cases independents tend to be in the middle between Republican and Democrats, perhaps not mathematically in the middle, but between the two polar sides of the political parties, where you just think of infrastructure being so important to the Democrats, but yet immigration is not as important to Democrats. National security, Republicans that are independents are basically the same, and it's not as important to Democrats. And then reducing the debt, ironically, is pretty much the same for all of them in terms of the three parties. But you think of this chart over the next month as you're watching TV or reading various traditional media, hard copy magazines, etc., online, and just keep this in mind in terms of what the sound bites are versus what they say they're most interested in, or what their constituents say they're most interested in. The other thing that we asked was, and we asked this just given that every time a vote is taken, it appears as if everything is strictly down along party lines. And so we asked, should Congress always vote along party lines? And you can see the answer were overall 54% of all respondents said no, they should vote on whether they agree on the topic. Republicans were 45, Democrats were 52, and independents were 66. Kind of interesting that independents don't really have a party other than a few individuals who say they're independent but then vote along one party line or the other. But it's just interesting, again, think about this when you think of what's going on in Washington relative to what wealthy Americans are thinking about in terms of how they want their elected officials to vote. And then the last thing we asked, which is a political hot button, is should politicians have term limits? And you can see, interestingly enough, all of them are well above half. 82% of Republicans down to 64% of Democrats, and 83% of independents feel there should be term limits. And then you can see not sure in the red, and no, politicians have to gain experience in the green. So just some interesting polling on wealthy Americans relative to some pretty interesting happenings in Washington. So I'm going to turn it back to Randy here to talk about his portfolios that we chatted about.
Thank you, George. I think it's important to note that we're recording this month's webinar on February 5th, a day in which at one point the Dow Jones Industrial Average was down more than 1,600 points and just closed down around 1,200 points. So a very, very volatile day for the markets. Down almost 10% in the past 3 days, the Dow average. So this is certainly a crucial time to make sure that with our monthly research, we're asking all of the prudent questions of wealthy investors relative to their thoughts and their feelings around how they're managing their financial blueprint and what they're going to do possibly in the future. Looking at this first question here relative to investment knowledge, I think it's important to note that the three areas we see down here at the bottom are defined as the mass affluent 100K to $1 million, the millionaire investor group as 1 to 5 million, and then the ultra high net worth with $5 to $25 million in net worth, not including their primary residence. And here you can see a significant difference going from the mass affluent up to the ultra high net worth relative to how knowledgeable they feel they are about financial products and investments. At almost 40% of the ultra high net worth saying that they feel very knowledgeable. This is also something too that because we normally ask this type of question towards the end of the year, this is also the time of year when many of these wealthy investors are going through their statements, looking at their retirement plans, and really kind of seeing how their financial portfolio has performed so far this year, as well as talking with their advisor or tax professional about the potential for selling various financial instruments that they might need to before the end of the year. So many times we will see this kind of uptick relative to the time of year the question is being asked and how knowledgeable many of these wealthy investors feel. Relative to risk tolerance, you don't see too many or you don't see too much of a fluctuation from the millionaire to the ultra high net worth as far as those who are conservative versus moderate versus aggressive versus most aggressive. But you do see a fairly significant drop-off relative to those in the mass affluent category who self-define themselves as having a more conservative investment mindset there at a quarter of those respondents. Taking a look here, and one question that we ask quite often and will continue to do throughout 2018, an update on a monthly basis, is about the current distribution of assets among these three groups. Certainly important to point out, I think, the two biggest categories that you see going from the mass affluent up to the ultra high net worth. One is that you see such a significant portion of the pie among the mass affluent population is centered around the value of what we would call their defined contribution, so their qualified plan balance. But you also see a significant amount of the portion at almost a third, 29%, of value in their principal residence, as opposed to the millionaire and the ultra high net worth, where you see significantly less in those two categories and significantly higher numbers relative to the amount of that financial pie that is allocated towards investable assets. And going on to the next slide, this is looking at investable assets by each different level of wealth. As you can see, again, there's a lot of the balances that are focused among the mass affluent in retirement-based products such as IRA rollovers, Roth IRAs, and contributory IRAs. And you see that amount lessen as you go up the scale to the ultra high net worth, where you also see a commensurate rise in things like mutual funds. And you see a much higher portion of the pie among the ultra high net worth relative to the other two categories. Looking at a comparison to asking this question 10 years ago, kind of in the throes of the financial crisis, one of the significant things that you see here is really kind of focused, again, on some of the same questions relative to principal residence. There is certainly the higher defined contribution plan assets, so a lot of that amongst the mass affluent can be contributed to the returns of the market since then. You see, too, that there's still kind of a similarity relative to some of the smaller holdings like your stock options, privately held businesses, as well as your insurance and your annuities. Taking a look here, the one thing that I think stands out very significantly is looking at the ultra high net worth, where you had back in 2008 almost a third of their investable assets were in the stock and bond category. Now that is down to less than 20%. And you can see a much higher allocation and percentage that is in the retirement-based accounts, going from 16% to 25% over the years. And among all three of those wealth segments, you do see a significant increase in the rollover contributory, and Roth IRA segment. Just kind of recapping a little bit, as many of you know who have worked with Spectrem in a variety of ways over the years, there are many different ways to leverage our services. One of the things that we always do like to talk about when we review all of the monthly indice numbers is that we do have a monthly newsletter, and we have individual subscriptions as well as enterprise-wide subscriptions available for our clients. So if this is something that you have an interest in, please certainly feel free to reach out to myself or George to discuss how that type of arrangement might be put together. Also, be on the lookout for some more upcoming emails about Spectrem's new Wealthy Investor series that is presented via our new visual analytics technology. There's a lot of exciting things we've been working on here from a technology solution standpoint that we just announced the official launch to earlier this afternoon, and I will certainly be in touch relative to how that particular set of research is going to continue to evolve throughout 2018 and into the future. So thank you again very much for joining George and I today, and we look forward to speaking with you again in March.